This video is a brief overview of specific record-keeping requirements for capital gains tax, the construction industry scheme, corporation tax, benefits and expenses, PAYE, the self-employed, and trustees. Capital gains tax is paid on profit derived from disposing of an asset. Disposing means selling, transferring, exchanging, or giving it away, or receiving compensation such as an insurance payment. You need to keep all records relating to the value of the asset and to the cost of acquiring or disposing of it, improving it, and proving its ownership. However, maintenance costs don't count. All assets dating from before the 31st of March 1982 have to be revalued for that date for capital gains tax calculation. Records should normally be kept for between 1 and 5 years. Contractors under the construction industry scheme have to keep full-size copies of records for at least 3 years. Records include gross amount paid and deductions made from payments to subcontractors, plus any materials costs, but exclusive of VAT. Returns have to be filed monthly, either electronically or on paper. Records kept for corporation tax returns are the same as a company's regular financial records. There are a few exceptions. Original documents must be kept for dividend vouchers, bank interest certificates, and construction industry scheme vouchers used before April 2007. In general, records must be kept for at least 6 years. Employers' records for benefits and expenses must be kept with the detail required by each type of payment to allow calculation of the correct amount of tax and national insurance contributions. They should be kept for 3 complete tax years after the end of the current tax year. In April 2013, filing PAYE forms changed from annual to real-time information. Each time an employee is paid, the information will have to be filed electronically. Employers' record keeping for PAYE is not affected by this change in filing procedure. Employers will no longer have to submit forms P45 or P46 to HMRC. PAYE records must be kept for the current and previous 3 tax years. For the self-employed, record keeping follows all the general rules. Records need to be kept for 5 years after the self-assessment filing deadline. Those with more than one business need to keep separate records for each business. Self-employed workers in the construction industry need to keep records of all payments made and received, and the appropriate verification numbers for higher rate deductions. Trustees must keep all records of the trust's income and expenses, plus supporting documents like stockbroker reports, contract notes, property-related transactions, and the like. They must also keep records of all payments to beneficiaries, and copies of all Forms R185 given out. Trusts that received additional assets must record the date these were received, the amount or market value of the asset, and details of who put the asset into trust. In addition, trusts need to keep records of minutes of meetings, deeds of appointments, and any decisions that affect the distribution of capital or income. Trusts with business income need to keep their records for 5 years. Those that don't have business income need to keep their records for only 1 year.